Hi everybody, I am Gautam from MGWell Day Trader. Welcome to our YouTube channel. So today topic we are going to see about the risk management. Let's see what are the contents we have taken. So the little introduction and why risk management and how to manage the risk and some of the summaries that we have learned today. So introduction, before getting into the risk management, we have everyone enter the market for some wealth creation. So we can say the market is the wealth creation center, but not everybody are creating the wealth. So there is one survey saying that most of the people, almost 90% of people lost their money in the market, which includes new and the seasoned investors. Both the beginners or the new traders or the seasoned traders who have been experienced like a professional traders, they also lose their money. There are a lot of reasons, there are countless reasons for that losses, but one of the important reason that everyone is forgetting is the risk management. So everyone forgets the major topic in our trading is the risk management. So why risk management is very important? Because in every trade, if you can take, if you are going for a long trade or a short trade, or you are going to invest in stock, in every aspect of the trade there is a certain risk involved, like a Newton's third law. If there is action, there is a equivalent opposite reaction. So always there will be some reaction. It may be in a profit side or in a loss side. So that is the risk. So risk means our losses are our targets or profits. So in most of the traders, like a beginners, will always focus only on the ROI. In market, ROI means return of investment. How much percentage you are getting from your invested amount. So not only the beginners focus on the ROI, all my colleagues, experienced investor or professional traders, they also focus on ROI. So they will say, if I give you 1 lakh or 2 lakh, how much interest you will give me in monthly basis. So that is not a right way in trading. So we should always focus on our risk management. So the main thing which is important in the risk management is our fear and our greediness. So we should take some experience or practice to avoid this fear and greediness in the market, to make some regular return of investment from our invested amount. And everyone think that the share market is gambling, like everyone says to me, because there is a higher risk. But one thing they forget to say, if you are aiming for a larger return of investment, then there is a higher risk involved. So trading or investing or making a market as your skill, then trading and investment is also a business for you. So you need to capitalize, you need to regularize, channelize your risk. So that is the risk management. If you are think that is if you want higher return of investment, then that is a higher risk. That does not happen in the market. That is gambling. That only is a pure gambling. Okay. So how to manage risk? There are many ways in managing risk. Someone will trade in a future market and the option market. They will have some different strategies in managing the risk. But we trade only in the equity stocks alone. So we don't trade in the options and the future contracts. We don't trade in any of the other instrument. Only equity stocks we will be focusing on. And I will teach you our way of managing our risk. So there are two simple steps involving managing risk. First is identify and respond. Identify your risk and respond according to the risk you have identified. Okay. So first, identifying your risk. Risk means, I have already said, stop loss and targets are our risk. In this, stop loss is most important one. So to identify the stop loss and the targets, we use the ATR values, as I have telling in all my daily trade videos. So we have to use the ATR values, or if you have taken trade in the value area low, value area high will be your stop loss. So you can use the value areas as your target or stop loss, and you can use the VWAP as your target or your stop loss or for the confirmation. Okay. So let's assume we have invested 1 lakh rupees. So and we are going to take 3 trades per day. It is average. I am going to take average. I will be taking 3 trades per day. Okay. So we have to split our invested amount, that is 1 lakh, into 3 parts. So we have to invest 30% in every stock. So we will be getting 30,000 each in single stock. With respect to our stop loss percentage, we need to adjust the quantity, that is our risk. So here the risk means quantity. In the equity stocks, the risk means amount of quantity we are going to take the trade. Okay, clear? So this is one of the trade that we have taken yesterday. So this is Ambuja Cement. We have taken trade around 287.5 to 287. At the point of entry, you can see the ATR value is 2.78. So 2.78 means the stock price is 287, 290. So 2.7 means it is almost less than 1% of the stock price. Okay. So let's see how we can identify the quantity in the next slide. So now we have identified the stop loss. So how to react? There are 2 methods in identifying the quantity. First one is when the Ambuja Cement, there is a stop loss which is less than 1% of the stock price. So whenever the stop loss is around or less than 1% from the stock price, then you have to use this formula. To identify the quantity, we need to divide the entry price from our amount we have invested. Like I have already said, we are going to invest 30,000 each in every stock. So 30,000, if your stock price is 300 and stop loss is around 302.5, the stop loss percentage will be 0.83%. So to determine the quantity, we need to divide 30,000 divided by 300. So our quantity is 100 quantities. So we are going to take 100 quantities, and our stop loss is 2.5 points, and we need to maintain target around 1.25 to 1.5%, which is stop loss is 0.83%. The target will be 1.5 to 1.6, which is double the stop loss. So always we should maintain this rule. If you are going to maintain stop loss as 2 points, then target will be around 3 to 4 points. If you are doing this in regularly, you will see some increment in your invested amount. Okay. So the next one is whenever the stop loss is above 1% of your stock price. So assume stock price is 304, same as the before slide. Now the stop loss is 304. So there is a 4-point stop loss. If you calculate the percentage of this 4 points from the stock price, you will get almost 1.33%. So 1.33% means it is more than 1% from your stock price. So in this you have to identify the quantity using this formula. So here 300 denotes the 300 is the 1% of the 30,000 invested. So like I said already, we are going to invest 30,000 in every stock. So 300 is the 1% of the 30,000 we have invested in a single stock. And we are going to divide this 300 with the stop loss point. So here stop loss points is 4 point, and we will get the quantity is 75 quantity. So we will be getting 75 quantity as our risk, and this 300 which is 1% of the 30,000 invested, and that is our stop loss, that is our risk. Okay, in rupees. So the summary of this video, so we have learned the risk management, and by doing this risk management we maintain our risk and find some regular income generator. Okay, if you have booked losses, for example, if you have booked losses in all the 3 trades, so I have said we will be taking average 3 trades per day. So if you have booked 3 trades losses, all the 3 trade losses, our maximum loss will be less than 1000 or around 1000 rupees only, which is 1% of your total amount invested, which is 1 lakh rupees. Okay, so in here we are explaining with the scale of 1 lakh rupees. So this is not the exact scale you have to invest. You have to, if you are a new beginner, you have to invest 1 lakh. So this is not the exact scale. You can invest, you can trade with the smaller amounts, bigger amount. You can trade with the 1,000 rupees, 10,000 rupees. You can trade with 10 lakhs, 20 lakhs. That is your own wish. Okay. So our aim is to reduce the risk and increase our wealth. Increase the wealth with the regular income. Okay. So this is our weekly performance. Last week we have updated around 24 to 25 stocks in our watch list. The one who have been following us regularly might know we will be updating the watch list in everyday morning itself. So in this 24 stocks, we have taken only 8 stocks trade for this week or the last week. Okay, so we have omitted almost 18 stocks. These 18 stocks, we don't say we didn't get any trade, but we didn't get any exact trade. These trades are taken on that day itself. So we didn't take the stocks. Some of the stocks on the 28th February might traded on the next upcoming days. We didn't update these kinds of stock. We have updated the stock which have came trade at the same exact date. Okay, so in this you can see all the entry prices, what are the stocks we have taken, the stop loss, the target, and quantity we have taken for 30,000 amount invested. So we have I have given the profit or loss, and we have made almost 3.5% from the invested amount, which is for 1 week, and we have traded only 4 days in this week, which is okay. Okay means this is great return of investment. Okay. So if you have any doubts in finding these quantities or managing the risk, or any what we can say, how to find the stocks, how to filter the stocks, and related to the volume profile doubts, you can contact us anytime. We will be happy to service you, or you can comment in the comment section. You can ask doubts in the comment section. I have given the contact number. I have given the Telegram channel link in the description box. You can add to our Telegram channel, where we will be updating the current updates, like I'm going to take this trade, so I will be updating like with a screenshot, so you can learn and with us. So you can learn with us. So thank you for watching this video till the end. Like, comment, and share our video, which might be useful to your friends as well. And subscribe to our channel. Most of the viewers are not subscribed, are watching our video. So kindly do subscribe to our channel, and feel free to contact us. We will be there to service you. Thank you. Bye.